Hey guys, Boris, BK Force. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, November 27th, this one of 2017. And I think the story in the COM dollars has been sort of the return, mild return of the carry. And that's because I think the market certainly is seeing the US curve flattening. It's not even so much that the 10 years are declining. It's the fact that the two tens are flattening, the 2 years and tens, the curve there is really starting to flatten out, and the market is looking for yield. So today or this week, we saw a flow, especially in the last 2 days of the week, into the COM dollar, surprisingly enough, and we saw the comeback. I guess the title should be called the comeback of the COM dollar as the week progressed. The ranges pretty much still stayed the same. We're still in these kind of very, very quiet unmovable ranges, 77 to 75 in Aussie, 129 to 126 in CAD. Although as usual, CAD has its own interesting story because of oil prices going on. And Kiwi came back from the dead in many ways, was one of the better performers. In fact, I think it was the second best performer this week, but still holding that 67 to 69 range as we trade. On the calendar, again, super, super slow week. We got nothing in the COM dollar land. I'm actually looking to see. I don't think we have even anything on the AUD side or the Kiwi side. It's just literally one event or maybe two events here. We have the CAD current account. We have the Australian performance of manufacturing. This is literally a non-tradable event. And the only major tradable event on the COM dollar side is the Canadian employment GDP numbers. That's actually going to be a very interesting point because this is one of the months where we do not have the U.S. data against the Canadian data. We are off weeks. So first Friday of December, as long as it doesn't fall on the first day of December, U.S. usually has its employment data, but now we pushed it back to the 12/8 of 17 because it's the first of the month. We don't report on the first of the month. Canadians do. So Canadian is going to have a spotlight all to itself. You'll have the GDP and the Canadian data. We are negative, actually, thinking that there's a sharp drop in trade component, IV, a lot of stuff. There's actually been, Canadian data has been soft, but don't get fooled because as soft as Canadian data has been, oil has been strong. So there's just all these counter trend flows in dollar Canada that continue to push it one way or the other. As far as Australia and New Zealand goes, there's literally nothing on the calendar of any import on the economic front. So it will essentially be, again, a trade on pro anti-dollar flows. Let's take a look at the charts here, see how the things shape up. Starting first with Aussie. So here's Aussie daily. We did kind of, flatten out ahead of the 76.50. So still we're sort of in this 75, 77 range. If we look at the weeklies, just to give ourselves better range, but look at how just boringly tight the body has been. This is actually the first healthy week we've seen in 4. This is the first up week we've seen in 1, 2, 3, 4, 5, 6 weeks. So hardly a huge vote of confidence, but a vote of confidence nevertheless, because you certainly have this whole area of 76, former resistance becomes relatively decent support, and we certainly have scope here to move towards 77 on any further dollar weakness. If the yield on the 10 years comes back down to below 230, that's possible, but it doesn't even have to be that. It could just simply be the compression between the 10s and the 2s that could have a move back up. Regardless, it's a slow moving trade, but for right now, we certainly have a clear evidence of support at around the 75.50, and you trade that with that particular stop in mind to the upside as Aussie looks to be a little bit more of a buy than a sell at this point. Kiwi looks to be much more of a buy than sell. Let me just get rid of all this commentary here. And you can see that, we did test the double bottom. We did dip below the 6,800, but we didn't really test the 6,700, which would have been a true break of the double bottom here. And that was pretty healthy as far as a buyback. A lot of short covering going on in the Kiwi here. 69 is still very much the overhead resistance, and really the 70 is going to be the very big overhead resistance. But Kiwi is still the yield king in a land of blind men. The one-eyed man is king, and Kiwi is very much that way so far. We'll see if there's any political news coming out, if the new Labour government is having any sort of impact. One thing that's negative, Kiwi, that actually is not really having any deleterious effect so far, is the dairy prices continue to slide down, which probably is going to translate into lower revs and certainly perhaps even lower GDP for New Zealand. So all of this This doesn't suggest much of an upside rally to the Kiwi, but right now Kiwi is ignoring its own fundamental data and pretty much looking at the fact dollar yields are coming down, and it's becoming still return of the carry trade on the Kiwi side. And then last but not least, dollar CAD, always an interesting story. This is the weekly chart. You can see the 4 weeks in a row we kind of stalled in front of this 2,900, which gives me scope and gives me confidence to believe that despite all of the negative Canadian data, we may have a little bit of Canadian strength here, all the way down to perhaps even 26, 25. And of course, what's propping that up is this. We're almost at 60. If we take out 60, it's hard to believe that the Canadian dollar isn't going to get a little bit of benefit despite whatever weakness we have in the economy, because the market is going to price in the fact that there'll be faster spend, better revenues, and all of those data points are going to improve materially as long as oil prices kind of stay above the 50, 55 level for any significant period of time. So really, it's oil that's going to be the much bigger story than the fundamentals. But of course, fundamentals will play their part, especially end of the week as we look at the Canadian employment data. Overall, on the dailies here, you can see the very nice little distributive top. What's even more interesting is on the technical side, this is a lower high. The high here was around, what, 28.17? We topped out there versus a high of 29, and pretty much ending on the lows of the day. All of this suggests that dollar CAD is a sell, Canadian dollar is a buy, and we could, the next big move would be a break of this trend line and taking us all the way down to perhaps 26 handle, even 25.50 as we get a much bigger distributive top. So that's how it shapes up. A small but modest upward bias in Aussie and Kiwi, and perhaps a more stronger downward bias in dollar CAD. Wish you guys the best luck, the best trading. Boris, over and out.